morning, good afternoon, good evening, everyone. This is Agatek. This is another lecture for continuation pattern in forex chart. So this rectangle pattern, you can see that on your forex chart, be it currency pairs, indices, stock, or any even cryptocurrencies, right? You can see this on an actual chart right? So a rectangle is a price action that can sandwich between two horizontal lines, right? Or that support or resistance level. So you can see this rectangle forming a level of support and resistance which are unequal. So we'll find this rectangle after a big move from the upside or from the downside, right? So one market is coming from the upside, which is coming from the bearish side, the bullish side, dropping down to the bearish side. You can see this rectangle forming. Or when it's coming from the bullish side, you can see this rectangle forming up, right? So this rectangle can be formed when the major market participants go to sleep on a smaller time frame, right? Rectangle are generally period of equilibrium, right? So in this rectangle, you can be able to find it on every chart where a range being formed under a support and resistance level being equal level, right? So a rectangle can be very narrow as it consolidates in the market. We see this in the consolidation market, or we'll call it ranging market, having the same equal high and same equal low. Or also, you can be able to see this in an actual price movement. What can be wider, it can be smaller, it can be narrow, it can be wider, right? You can see this in a wider form where we have a range of, when you try to do your order flow, either from the higher time frame, maybe from weekly down to 1 hour, you can see a range of any support and resistance from the low higher time frame, maybe 4 hours, and narrow it down from to 30 minutes or 1 hour. Then you can see where the market is ranging inside the same support and resistance zone, right? But when it breaks out in a higher move and goes towards that direction, right? So this is a classic formation for a breakout type of trade. So if you take a look at this left hand side called a bullish rectangle formation here, you can see the market of a bullish rectangle will move from below with high momentum moving up, right? The bullish move, a bullish momentum, then began to range, forming a floor of resistance and support area, right? As a range, it has the same level of support, it also has the same level of resistance. So we have 80% possibility that the market will continue towards upside on its original direction, right? So it's something applicable to bearish rectangle. When you have this bearish rectangle, the market comes down from the downside, right? Now when it comes down to this downside, it begins to sideways, forming a point of support and resistance, or point of supply and demand formation. So this sideways is actually formation that we can sandwich in order to pushing in a trade. So when this comes down, we have a 80% chance or probability or possibility that the market will continue its original downtrend after its ranging pattern, right? So that is the next one I'm going to show you how you can be able to trade this, and how you can be able to set your take profit or stop loss using or trading with rectangular pattern. Right, take a look at this stuff here, right? The market is coming bullish, begin to range bound, and consolidate inside this band and breakout. So if you want to take a profit target when you have a breakout, you use the rectangle point of support and resistance. So if here is 100 pips or 50 pips or 30 pips, when it breaks out, we have to target 40 or 30 pips depending on the height below the rectangle. So if we measure our height on the natural chart from here to here and measure the same thing from here to here, we'll have a profit target similar to this, right? But I'm not saying it should be the same thing, but maybe far more higher than this. If this is 100 pips, we can have 150 pips here before continuation, or maybe before retracement. And you can also check on your actual chart if there's any liquidity or price that market is trying to take out on that area. The same thing applicable to bearish rectangular traditional targets, profit targets. Something applicable to here. Measure the profits inside that support consolidation pattern, and when it breaks out, you also target that same profit and get out of the market. So let's take a look at this on an actual chart. All right, initial pull, right? From here, the market drops down, with that aggressive move. And what happens? It begins to do what? Range bound, forming equal highs and equal lows, right? Having some support and resistance area. So, normally we call this a price range, like a consolidation area where markets tends to do what? Come back and retest again. So when we have this area, normally in an actual chart, when you see this area, we have a high tendency the market to maybe go down, come back and mitigate or retest that area, right? So take a look at this. This is what we call bearish rectangular formation on a real chart, on an actual chart. So the market drops down to this area, begin to do what? Form an area, consolidate in a rectangular form, forming a support and resistance area, which is this, and this, right? So what happened next? The market broke out this area, close below, and did the same move around this area. Now, if you want to take the profit from this area, you can measure this area, for safety. You can measure this area when you have a breakout. Measure this area. If here to here is 40, you can measure this one too, and measure this one too. So if you have too high tendency of measuring from here to this spot, it may give you 100 pips, and you can target from here to 100 pips, and you're out of trade. Or you can measure this area inside this box, which is maybe 50 pips. You can also target closes below, target 50 pips from here. You can set your TP, maybe you may move out from the market, right? So, but when taking this trade, what you need to do is to assess your higher time frame, flow from your higher time frame to know if there's a price, or if there's a mitigation, or if there's a block. That's what we call that block. You can Google about that. You can browse about that on YouTube. Or that block or breakout block. There's another block of FVG or liquidity that the market is trying to take out. As long as it closes, it is below this area, and you see the candle has closes below this area, you have a high tendency that the market is moving towards that other blocks in the higher time frame, thereby forming all this sharp move here that will take you put in profits. All right, let's take a look at the bullish rectangular formation. So the market has an initial upside move, upward move, and began to do what? Range bound, forming an area of resistance and support, bouncing and bouncing. And if you take a look at this, it has equal heights, right? And what happened? The market closes above the candle closes. Remember, the closure of this candle should be the body, not the wicks, right? You can have the wicks take this out and come back and will not close above all this candle. That means it's not yet valid, right? So when taking a trade with this one, you have to make sure the body of the candle closes above all this candle here. Now you can target some pips here, because you may target some pips. Market may have this complete move here, and from here it will trace back downward, right? See what happened? No, so what happens here now? You can be able to pick this from here to here, measure it, and put your take profit. Or you measure from this floor to this area with your Fibonacci, and measure from here to where you can take your profit, put your take profit, right? So you have two ways of entering the market, either by 2 to 1 to 1 risk reward ratio. You measure this area. If it is 50 pips, you measure 50 pips and set your stop loss below and target 50 pips. Or you measure from here to this area again and enter the trade from here and target the same pips or less on this area in the market. So that is that about bullish and bearish rectangular formation in continuation pattern. So we have the continuation pattern, we have neutral pattern, we have reversal pattern. So remaining one, it's remaining one lecture I'm going to do about continuation pattern. So we can round up this continuation pattern, and I'll move into neutral pattern. From neutral pattern, we'll move into reversal pattern. So that is that about bullish and bearish rectangular formation in an actual chart. Like I take lots, you guys. Don't forget to subscribe, share, and like this video. Bye for now. Peace.